Good morning, everyone. Brian Hoops here, Midwest Market Solutions, Market Insider TV. This is our opening commentary, Friday the 13th, June the 13th, and good morning. What a volatile night it was. You can see crude oil still sharply higher, but way off of session highs. Look at a chart of crude oil real quick. This is crude oil. We identified a gap here, but we blew through that, blew through this resistance, blew through these highs made back in January. So we're the highest levels of the year overnight. But we're trading about this level here as we record this, right in the 71.90 area. The high overnight, and this is the August contract, as high as 74.63. So we're a couple dollars off of those highs, $2.50 right now. Identify this as support on any weakness. This was the old high. We came down. I know we touched it in the middle of the night, and we bounced off of that area. This is about 70.42. This was your breakout point, and that's kind of the key for the rest of the day. Now, if we go back to our fundamentals and look at what's happening in the markets, we'll talk about reasons why here in just a second, but these markets very volatile. You see stock market down sharply, and we've really paired losses there too. If we look at the S&P on a daily chart, it doesn't look near as big as a crude oil because we had such a volatile range back in here, but we were down quite a bit, and then we've come back, and we're back to this 59.92 area that we've traded at seemingly for a week and a half now, in very volatile trade. And let's just talk about the overnight markets, and we'll get into the reasons why we're trading this. Dollar index is sharply higher. Nat gas is a little bit firmer in here with crude oil, as we mentioned, spiking higher, stock market higher. Gold and silver, we're seeing a big spike in gold, but silver's pulling back off of its highs. And corn is down 1.50 in the D's. November's up 2.50. November beans, mixed trade. You can imagine the bean oil would be higher with crude oil. That's supporting soybeans, while wheat is about 3 cents better in our night session. So let's talk about it, because it's a lot of news here, a lot of headlines that is driving us and will drive us during the session today. But first of all, weather maps continue to call for nearly ideal growing conditions across the Corn Belt. It is really a good forecast for almost everyone as far as corn and soybean production goes. Israel overnight launched a nuclear strike against Iran that killed 4 high-level generals. Now, apparently those generals have been replaced, and Iran vows to retaliate. But the concerns about oil disruptions in the Middle East is spiking oil futures. If Iran retaliates and this war escalates, look for more strength in crude oil. Crude oil will continue to spike, continue to rally. If, in fact, this is a one-and-done type of situation, values are probably way overvalued. We've spiked higher here, and now we've came and sat as nothing has happened overnight. But again, this is going to be a weather-driven market, a headline-driven market, not a weather-driven market, a headline-driven market for crude oil. And that headline right now is volatility and uncertainty about that oil supply in the Middle East. Yesterday's supply and demand report was really not much. Old crop corn stocks exports were increased by 50 million bushels, and that tightened our balance sheets by 50 million to 1.365 old crop, and the new crop, because of the carrying number, at 1.750. So we're going to produce a big crop this year. It certainly looks like, but our ending stocks pretty decent, only 1.75. It could be a lot worse. A couple years ago we were talking well over 2 billion bushels. Maybe 5-6 years we were talking nearly 2.8 billion bushels of carryout. Now we're less than 1.8, even with increasing acres to the third largest in history and a big crop yield. So we are using a lot of this crop as far as exports and ethanol demand, as well as feed usage. Old crop soybean stocks, 350 million bushels. New crop at 295. Those are all unchanged, as the USDA made no changes to soybean balance sheets. New crop wheat stocks, 25 million less than last month because of exports increased by 25 million. All wheat production was left unchanged. A little bit of a surprise, but there is certainly time for them to make changes, and I expect that they will. In the July supply and demand report, we'll see some all wheat production changes, and that'll be an increase in production. More cash cattle trade to report. Yesterday, 380 dress, steady with a week ago, and in the South, we're 235, again, steady with the week ago. That's why the futures market has not really responded with big gains other than the June contract this week. It's those cash trade that's steady. instead of higher. That has attracted a little bit of profit taking on the futures market. Steer weights down 4 pounds, 940 pounds, 16 above year ago levels. That's not a bad number by any means, tightening up the steer weights. Cutout values have crept higher this week as the slaughter pace is down sharply from a year ago and from last week. So let me get the numbers here for you. I don't have it on a slide. Week to date slaughter is about 21,000 head less than last week and over 33,000 head less than a year ago. So that will help our boxes. All right, stay hooked, stay volatile. It's going to be a wild ride here during the day session, especially as we go into a weekend. Have a great day. Good luck and good trading.